Hello, everyone, and welcome back to another session with me, Kavita Agrawal, the founder of EXP Invest. In today's Let's Get Technical series, we will be talking about the importance of capital allocation in swing trading. Now, just today, I was talking to a new prospect about swing trading, and clearly in the conversation, even though the prospect has been trading for the past 10, 12 years, the concepts of risk management and capital allocation, for some reason, haven't really burrowed into his consciousness. As a result of that, people continue to hold on to stocks even when they have fallen 10 to 15%, as was the case with this prospect, and then they blame the markets. But when you're coming to the market for doing swing trading, you have to make sure that you're managing your risks and you're managing the allocation of your capital to specific stocks in a very proper manner. Now, before we go into the details of capital allocation and how I plan my capital allocation, which you are more than welcome to copy, I want to tell you why it is so important to manage your capital allocation and manage your risk at the same time. Now, in the stock market, you're coming to grow your capital. That is the main objective. But when you buy 50 stocks in your portfolio, which I know many of you have made that mistake, if you're one of them, do indicate that in the comment. When you buy 50 stocks in your portfolio, you are over allocating, you're under allocating. Both under allocation and over allocation are a problem. The problem in both is that in one, that is in under allocation, you're not giving enough power to a stock to grow your capital. So what will happen is you buy your stock, that stock is one out of the 50 stocks in your portfolio of maybe 50 lakh rupees. Even if the stock goes up 100%, what is it going to do for your overall portfolio? Not much. And on the other hand, if you buy 25% or if you allocate 25% of your capital to one single stock in your portfolio, what is going to happen is if that stock turns out to be the bad apple, it is going to drag your entire portfolio down. So even if that stock falls 10%, dent on your entire portfolio can be really high. And you don't want that. Swing trading basically is a very delicate balance between your risk management and your capital allocation. There is a sweet spot when you need to operate, and risk management is something that we've discussed in huge details over time and again in a retail trader special series and in the Let's Get Technical series. So today let's focus on capital allocation. Before we get into that details, I want to tell you about this. So you know that every session I spend time at the end of the session answering your queries. So I have seen a lot of people get a little bit angry at me that we give our queries, but you don't answer the queries, and there is no way that I can get back to you on irrespective of whether I have answered your queries or not. So after much deliberation, I have decided to systematize this stock query interaction that we have. So what you need to do is you go on your browser, you search exp-invest.in/request. I am copying this link and I'm dropping it in the comments for you. So this is where you're going to request your stocks. And at the end of the session, I'm going to take a look at 10 responses. So every session, we'll take a look at 10 stocks at a time. A lot of times there are overlapping queries also, which is great. I can clearly see what are the name of the stocks, who has requested it, what is their query, what is their cost price. Now I'm going to give you the stop loss target risk reward ratio. The benefit of filling up this form is that once I'm done with the session and your query has been resolved, even if you've not attended the live session, my team will get back to you and will share these key levels with you and the link of the session, which will be pasted here. So make sure that you join it. So if you experience lag, just join my Telegram channel. I'm going to drop the link to the Telegram channel as well. And later on, I'll be posting the edited video of this, so you can watch that edited video. Is going to deal with the delays and my redundancies, and it'll be more crisp and more time efficient for you. Stock request form is the first form that I'm sharing. Invest.in/request stock. So this is the stock. This is the link where you need to click to request your stocks. And I am also sharing with you my YouTube link. And most importantly, you need to join my Telegram channel, because no matter everything, if you miss, if you join my Telegram channel, you can find this capital allocation matrix, which we are going to discuss now. You can get access to the live sessions that I do, and you can also get access to these knowledgeable quizzes that I post every morning and learn from those. Also, I run special offers on my Telegram channel, which is only exclusively available there. So now, as you guys continue to input your stock queries, I'm going to go back and I want to discuss with you my own allocation matrix, which I follow, and I want to show you how I have created that. There's a lot of stuff in this, so don't get intimidated or don't worry about all the various columns. Just focus on what I am talking about. So this is like a master list of some 590 stocks of whose sectors and market cap and small cap and allocation has been calculated. So don't worry about that list, ignore that list. This is what is important. So this is for the Indian stock market, as you can see, and the market cap has been calculated in the billions of INR. So basically what I'm saying here is any stock which is more than 200 billion INR needs to be identified as a large cap stock, there I'm allocating around 8 to 10%. Any stock which is less than 200 billion or 20,000 crore, but is more than 50 billion INR or 5,000 crore, right, is more than 5,000 crore, that is the mid cap stock where I allocate 5 to 8% of my capital. Now, if a stock is less than 5,000 crore market cap, but more than 1,000 crore market cap, it's a small cap stock where we allocate 3 to 5% capital. And the rest are micro cap where we allocate barely 1 to 3% of our capital. Now, why are we doing this? Why are we choosing this different allocation percentage for different market cap? Answer is very simple. You have to think about the market beta. Now, what is market beta? What is beta of a stock? Beta of a stock is the sensitivity of the change in price to the stock versus the broad market. So let's go to the charts for more illustration. Let's take an example of ITC. Now, we all know that ITC is a mega large cap. Now, when it comes to a mega large cap, the reason why we need to allocate more money to such a stock is because they're really slow movers. Now, if you're doing swing trading, you're obviously analyzing your charts on the basis of one particular decision-making time frame. Personally, for me, the decision-making time frame is 75 minutes. What that means is that if you see my layout, there are 6 different time frames. In these 6 different time frames, allow me to look at the price activity in different levels of zoom in. Looking at the 3-minute time frame is like zooming into the price activity a lot. When I'm trying to make a very precise execution decision is when I look at the 3-minute time frame. When I'm trying to make a decision of whether I want to buy and sell a stock, I'm looking at the 75-minute time frame. And when I'm trying to decide whether the stock is a good candidate to be assessed for a potential position, then I will look at the daily, the weekly time frame. Why we have different allocation for different stocks is because their sensitivity is very different. So, for example, if you look at how much a stock like ITC can move during a period of say 60 days, it's maybe 12-13%, and that is great movement for a stock like ITC, right? But if we compare a different stock, let's take TTML. Okay, TTML is a mid-cap stock. If we look at TTML, I'll tell you how much TTML is capable of moving in a 60-day period, and I'm taking a random 60-day period on the chart, calculating the bottom to top. So a stock like TTML can move anywhere between 40 to 60% in the same period. So while this return looks great, you have to understand that this movement can happen both upside and downside. So the volatility, not just the volatility, even the range of movement can be very different from small cap, mid cap, and large cap stocks. And that is why our allocation also has to be different as such, because while we want to expose our capital to these potential upsides, we also want to protect our capital from the potential downsides. A stock which is capable of moving 60% up in 60 days is also capable of going 30% down in that period or even more. So when you set your stop losses, basically your stop loss will obviously have to be a lot bigger for these small cap and mid cap stocks. And if you're continuously setting larger stop losses for all the positions in your portfolio, when the market becomes choppy or bearish, your portfolio is going to suffer a lot. And the entire objective of swing trading is always to minimize your risks, which means that when the market is very bullish and in your favor, you want to make as much money as possible. But when the market is not in your favor, that is, it's either choppy or it's bearish, you also want to protect your capital. So you need to find a balance of a mix of large cap, mid cap, and small cap stocks, which give your portfolio enough buoyancy to rise up when the tides rise, but also it keeps it light enough, or it keeps it safe enough so that it doesn't absolutely sink when the tide goes away, right? You don't want it to hit the bottom. So that is the reason why capital allocation is so important. Now, on my Telegram channel, I have just shared the capital allocation matrix. If you don't have a capital allocation matrix of yourself, feel free to join my Telegram channel and use allocation matrix. Also, in my advanced technical analysis training program, I teach in more details about this capital allocation, risk management, how to set stop losses, stop loss setting in different market conditions, in different stocks, different stock personalities, and so much more. And also, I run a Trade Together program in which I give the participants stock recommendations with capital allocation on the basis of all this analysis, which I share with you 3 times in a week. So if you're somebody who's interested in doing swing trading and you would like to get associated with someone who's SEBI registered, has the credentials, has the experience, then feel free to check out my website. I've already dropped the link for you, or you can simply join my Telegram channel. I keep sharing information about my Trade Together program. And lastly, I would also like to announce to you that I'm very happy this week because we crossed 10,000 followers on Instagram. Now, I know Instagram has that image of being a place where time pass content is shared, but I use these webinars that I share with you and make shorter clips of them, very condensed, very knowledgeable clips, and I've been posting. And somehow I've been blessed by the algorithm. And within 2 weeks, I went from 2,000 to 10,000. And in the last few days, I've crossed 16,000. Today, I crossed 16,000 followers. Right. The same shorter reels are also posted on my YouTube, where also I have crossed around 3,000 followers. But that's not what I wanted to tell you. In order to celebrate this achievement, I am running an offer right now. It's a 10% discount on all my stock recommendations. So if you're interested in joining the Trade Together program, do avail this offer. I don't usually give discounts on my services because I feel giving discounts is very unfair to the people who have paid the full price for the same services. But this week is an exception as we are celebrating a milestone. Now, without any further delay, I am going to start responding to the stock queries which you have all very kindly submitted. The first stock query is by Kunal Pala. He's asking for the analysis of Web of Global. Let's move on to the charts and let's take a look at Web Global. Not a very good stock. The stock is no longer part of my watch list because here the stock has been in a major downtrend. But this is interesting. I was not aware that the stock has bottomed out, and the weekly time frame suggests that we should trust this rally which is unfolding. So this is a stock where I used to trade quite actively, but because of the bearish trend on the weekly time frame, I stopped. But I can also notice very clearly that the daily time frame has also moved into the bull range and is gaining momentum. This is very interesting. You see this uptrend, it's showing good volumes. So I'm guessing, let me see what Kunal has said. Is it too late to enter? So 493. So you want to make a fresh entry. I don't think it is too to enter. It was a bit of negative divergence, but the stock taken correction and come back to the level of 30. I think this actually good stock for entry right now in the market. So what you can do is you can see this, it's already also created a base, but then there is also this 200 EMA level, which it might want to come and retest because it spent a considerable amount of time below the 200 EMA before this rally broke out. So I think the 200 EMA might get a retest. It's a very important support zone. So for Web of Global, again, it's a high movement stock. If you look at this movement itself, this is 37% up in 20 days. This is massive. So the stop loss level which I will expect you to maintain would be, which I would recommend you to maintain, would be 400. And I should also include the spot price here. So the price is right now 473 when I'm analyzing. So 473 is when we've studied the stock. Let's turn this to white and this to black. So we have studied the stock at 473. I recommend the stop loss of 442 on this. And let's see what the probable target should be. Because the stock is in really strong uptrend with good volumes, I would expect this uptrend to continue for a while longer. And this is looking like a very legitimate trend line which I would expect to get tested. And also if you look at it horizontally, there is a very important peak which might pose as the resistance to this wonderful momentum. And then this level is also very close to a round number. So there's a psychological impact related to round numbers. So you can see the risk reward ratio for Web of Global at this level is more than 3, which makes it a very good stock to go forward with. But with that, I also want to give you this disclaimer that free advice is equal to expensive mistakes. Now, even though I am sitting here in this call, not knowing you, telling you that this looks like an attractive stock opportunity, my view will be negated if my stop loss gets triggered. And also, if the stock moves above the level of 545, you will require a revised stop loss. So you need to get in touch with me. Now, if you're somebody who's not connected with me, not part of my Telegram channel and acting on my advice here, tomorrow, if the stock goes down and you experience a loss, don't blame me. So please exercise caution. And if you like my analysis, then don't edge for free analysis. Rather, get connected with me and let's work together on your portfolio to grow it. Next, for Rishi, let's look at UPL. So chemical sector, I am very bullish on the chemical sector for the long term. If you can hold it for next 4-5 years, now is a very good time to add long-term positions in chemical stocks because chemical stocks have fallen like 30, 40, 50% from the top. For the short term, see, chemical sector is not attractive at all because you see it is still declining at a very strong volume. UPL, I would say, is a no. Now let's look at BCG. I haven't studied it for a long while. And redraw our trend line. BCG is not a kind of stock that I prefer to do swing trading in because it is a little bit illiquid for my taste and my liking. And when I'm swing trading in a stock, I like its overall parameters to be favorable for me if I want to do an exit for whatever reason. See, my personal recommendation to you would be don't fall for stocks like BCG, which can be very risky. But if you still want to take that, be the bung and stuff, then sure, go ahead and maintain a stop loss of 17.4. Good for long term. Now, this is too risky, too illiquid. But the stop loss that you should maintain if you still want to be careless about it would be 17.4 massive stop loss, 20, almost 10%. And let's look at the potential target. So it does look like BCG is trying to break above this blue line, which is the 200 EMA. And if it does break above the 200 EMA, then I think it can start like a massive rally. So what you might want to also do, you could wait for a breakout above the level of 23 rupees. And if the breakout happens with strong volumes, you could do that. Or if you feel that you don't want to waste this 20% upside, the problem is that for the short term, I can only give you the target of 21.4. So that's only 10% upside, which naturally makes the risk reward ratio very attractive. The risk reward ratio in this case is absolutely horrible. You do not want to participate in a stock with that kind of a risk reward ratio. Yeah, its risk reward ratio is 1. It's not worth taking the risk. In a stock like BCG, you want a risk reward ratio of minimum 10. So Vaibhav is asking, ma'am, how to set GTT. Vaibhav, it is very easy to set GTT, and I'm going to show you how to do it. So there are many ways to set GTT. Like for instance, if I show you on my own trading account, what you can do is you can click on the stock, click on create GTT, and this GTT window will open for you. Now in this GTT window, you can see there's transaction type, there is trigger type. So just select on sell, click on OCO, and then here you need to set the trigger price. What is the stop loss trigger price? This trigger price is basically when this price comes, an order will go to the system that set a stop loss for me at this price. This is the limit price. So what I do with my members is when I give them a stock recommendation, I always tell them to set a stop loss. So let's go to my premium channel. So for example, I told members that Hindalco, revise your stop loss to 584. Imagine this is Hindalco. So what you will do is you will set your trigger at 584 and you set whatever quantity you want to set your stop loss in. And then you set the limit price slightly lower than the trigger price. Why slightly lower than the trigger price? Because sometimes if the market is moving really fast, if it's falling and it triggers your if it triggers your GTT, your good to trigger order, if it triggers your GTT, you want your order to get set in the order book and get executed. Because if the market is moving fast, if a stock is falling fast, there's a good chance it's going to go from 584 to 583 to 582 to maybe even 570, and you don't want to experience that kind of loss. So it's okay to give a little bit of unfavorable buffer to the market, set your trigger price and set your limit price a little bit lower. Same goes for the target. So suppose for Hindalco, I have given a revised target of 650 today. So you can set 650 here, and then in your limit price, you'll do the same thing. You will set your limit price a bit lower than your trigger price. So this is one way of setting your GTT orders. Another way you can also set your GTT orders is you can go to the watch list. Let me open the watch list and show you. So what you'll do on the watch list is click on the 3 dots, you'll see create GTT, and again the same window will open and you can work with that. Let's move on to the next stock. So we've discussed the first 3. We'll go for Titagar Wagon for Shreyas. Rail stocks. See, railway stocks have already rallied so much, but the retail interest there continues to increase exponentially. Titagar Wagon, what I can see is that this rally which has started has been quite incredible. It has gone up X in a matter of just maybe 4.5 years, but this is just the weekly time frame. But what I'll tell you is that on the daily time frame, I can see some signs of exhaustion of momentum. When the stock reaches the stage of euphoria is when the retail traders start getting very attracted to a stock. And my motto in the stock market is very simple: do not buy stocks after the rally. Wait for for them to either dip or correct before you purchase. And there's a difference between dip and correct. This stock has a tendency to take support at the 200 EMA on the 75-minute time frame, and right now it has come down to that support. The stock has declined almost 20% in 20 days from the last high price. Even though the daily time frame looks a little bit bearish, it does look like there is still steam left for at least some short-term positions. What you can do is you can maintain a stop loss below this 500 EMA of the 75-minute time frame. I know it's going to be a big stop loss because this is like a vast-moving stock. I personally wouldn't participate in a stock like this because I, at any point of time, don't want to risk 12% of my capital on one position. But too risky. Huge stop loss. So the spot price in this stock is 1030 and the stop loss I've told you is 900. What is the potential target that can be expected here? See, for stocks that move like this, usually giving the target is a nightmare. So what I tend to do in stocks which are trading at all-time high and absolutely out of the water with respect to any plausible resistance levels and showing like a accelerating trend line, I just like to trail my stop losses every time the stock moves up like 2-3%. So here, even if I draw another set of trend lines, even this trend line becomes useless pretty fast because of the acceleration in momentum. But let me still give it a shot. This is like guesswork at this point. It's not very reliable. But if I see the last time the stock took support at yellow line, which is basically the 50 EMA. It went up 65%. What did it do before that? Before that, this was a massive rally. And then what happened before that? This is where the stock again went up. But then the problem is that the three waves are also over. So there is a pretty good chance that the stock does take a big correction. So what I'm going to do is I'm going to reduce your stop loss here, and you should use a stop loss at the level of 85 instead of this massive stop loss. And what we are betting is that the stock reverses up from this 200 EMA. If that gets breached, you need to get out of the stock. First target for you will be 1243. If it retests the existing stop loss or existing peak, and that's a really good risk reward already. And what you have to do is you have to keep revising your target also upwards. Now, there's a good possibility that the stock gives a spike, triggers your target, and then comes back down. So you set the target, but whenever the stock is like within 3% range or 5% range of your target, you revise it by another 10%. That's a bit of active monitoring that you'll have to do. That is what you should do for Titagar Wagon. Now let's move on to the next stock, SBI Life. Now we're looking at the daily time frame, and SBI Life I'm not very bullish on because I can see there is a very strong resistance zone which has forged here. So what I can see is strong resistance zone, and if you'll see, this SBI Life has a tendency of creating these resistance zones, retesting it multiple times, and then third, it just falls. And also every time it does that, it gives this negative divergence on the RSI on the daily time frame, which it has already forged. And also again, this last leg of upside which is unfolded as against weak volumes. In fact, when the stock was declining, there was increase in volume time, and again, I wouldn't trust the rally in SBI Life anymore. If I absolutely had to take a position, I would suggest you to wait for a breakout above the level of 1500 and make sure it's on high volumes to participate. So looks bearish. Should I hold for 6 months and see? Looks bearish and topping out. Next, let's take a look at Aster DM for Anurag. Just a reminder, if you also want your stock queries to get answered, you can simply fill up my form. All you have to do is go to expinvest.in/request stock. You do that, and then you fill up the form, and your stock queries can also be answered by me. DM. Very bullish stock. The bullishness just keeps getting stronger and stronger, but I think you might actually benefit to wait for some mean reversion here. What I can see is you've not added any comment, but you have added a price. So you've been holding Aster DM since 197, which basically means this is like a long-term holding for you. So you don't have to worry at all as a long-term holder of this wonderful stock, wonderful company. I think the bull trend is very strong, and it definitely looks like it's going to continue. But for anybody who's looking at the stock for a fresh entry, do not consider doing that just yet. Wait for the stock to come back down to the level of maybe 394, and there you can take a judgment call of whether you should purchase the stock or not. So right now, keep holding on for long term, not for add more near. You can add more in Aster DM somewhere around the level of, I would say, 380 to 400. Now let's move on and let's take a look at Pidilite. Pidilite has given superb movement in the last few days. Beautiful reversal, very strong movement. And what I can see is that bullish trend is expected to continue for sure, but it's not a good time to make any fresh entry. The problem is that this uptrend that has unfolded is not unfolding against very strong volume, and because of that, I'm not so sure. So if someone is already holding this stock, what you can do is you can maintain a target at the level of 28. So guys, with that, we've come to the end of our session. I hope I was able to add some value to your own trading journey. Thank you so much for joining me today. I will see you again on Friday at 5 p.m. where we will talk about Nifty, Bank Nifty, and the intersector analysis, because we want to know where the momentum is so we can put our cash there. So I will see you again. Thank you so much for joining me, and thank you for being a great audience. Namaste.